morning, and yes, complete change of pace. So we're going to be talking a lot about marketing now a little bit, and also new channels. So what you're seeing is a lot of traditional, insurance companies around as well. And what you see on this panel is new age channels in terms of insurance companies and how they go to market. What I will do is get the panelists to introduce themselves, and then we will play a little video for you guys to set the stage in terms of what's available out there in digital marketing today to target consumers. So please, let's start with you, Yujun.
Good morning, everyone. So I'm Yujun, and I'm the co-founder of a company called Insbee, peer-to-peer car insurance. I'll share a little bit more about that later. My background actually is I'm very new to insurance, about 6 months old. But before that, I spent about 3 years actually incidentally in a company that's very closely linked with Nandita's company, which is actually in location analytics working with telcos. So it was a big data company. And that actually sort of led me on to this journey because I was trying to sell some of our solutions to insurers, and I realized that there's quite a bit of a gap, which I thought then I could come in as a company and try to leverage on that. And before that, I was actually working in a bank as well, in Citibank for about 4 years. So a little bit of a mix of corporate as well as startup experience.
Hi, good morning, everyone. My name is Val, founder of PolicyPal. So PolicyPal is an insurance management app. We help you to understand, manage your existing insurance policies all through a mobile app. And then you can buy new insurance through the app after you find out any shortfall or any missing gaps. So my background, previously I was in banking and insurance. Started PolicyPal early this year. We were previously in an accelerator program called Startup Bootcamp FinTech. We graduated from July onwards and been trying to grow the business ever since.
Okay, good morning, everyone. I see a lot of familiar faces today. I'm Matthias. I used to be the CMO for AXA in Asia, the general insurance side, and I left in 2014 to set up a company called Star Group, a competitor of Stark Enterprise, for those who ask a question.
Tony Stark is a relevant
Tony Stark is a good friend. And Star Group tried to digitalize insurance. So we have few solutions. One who digitalize products and put them online. We have about 19 web apps that you can see on Citibank, on DBS, Amex, but also on few other broker or agents. We have a tracking platform that is able to track, report, monitor the business going through the insurance industry. And we are developing 2 other solutions, an agent aggregator called yourinsure.com, where we have about 160 agents now. And we provide them a responsive website where they are allowed and able to sell online. It's the first acquisition tools for general intermediaries in Asia.
Thank you. Good morning, everybody. It's good to see all of you again. My name is Chris. I come from a company called Providend. We are the people, as I mentioned yesterday, that bring about this web portal called DIYInsurance. I've spent about close to 20 years in financial services, but all the while in a financial advisory house. For Providend, we are actually a fee-for-service advisor. We started out as that. We give advice to clients. Clients pay us a fee. We don't take the commissions at all if the clients actually buy the product. So for a long time, when clients come to us for insurance advice, we charge the fee and we rebate back the commissions 100%. But about 2 years ago, we were thinking how to reach out to the mass market because most of the clients that come to us and will be willing to pay a fee are the more affluent ones. How then do we reach out to the people who are unable to pay a fee or really shouldn't pay a fee because their needs are really simple? And so 2 years ago, we started out DIYInsurance, which it is a web aggregator that allows people to compare life insurance products. And if they buy it through DIYInsurance, they get a 30% rebate. It lowers their cost of buying insurance, and also it is a platform whereby we offer transparency. We give clients a more comfortable and a safer place to buy the insurance product. I was just telling my colleague today that this whole tech space is really very new. I feel like a fish out of the water. And I look around, unfamiliar faces because I don't see anyone at all. They are in my industry. But at the same time, it says a lot about the traditional marketing model. There's huge resistance from the traditional model of distributing insurance. So I'm here on this panel actually more to learn. I hope I can contribute a little bit. Yeah, but I look forward to that discussion.
So I think one of the common things that you guys are hearing is a lot on tech. So everything is gone actually tech. So both from a channel perspective and also how you'd connect to your consumer. So if indeed you're going to be talking to the end consumer and you want to target a certain person, there is new tools out there that allow you to do that. So today, everybody who's in any industry actually have to be kind of tech savvy. That's what it's coming down to. And also, everybody in this room I can see is on their mobile. So that's another place to get people at. So mobile and technology tools are the way forward in any industry, to be honest. So maybe at this point in time, we'll just lay the setting and play a video.
We all know mobile is everywhere. So many consumers, so much data. What can connect a digital user to the real world? Location. Who can leverage the power of location for you? Near, the location data expert. Near connects all the dots for you. Near created proprietary tech that has the power to know where a user goes, what type of content they consume, and when they do it. Near builds consumer audience profiles using various data bricks. So now you can understand your consumers better and know your competitors and your market, like how we know that Thursday is the preferred shopping day for Australians. Or 69% of travellers to Shanghai Airport travel more than 3 times in a month. Near allows you to target consumers at the most relevant moment. Like Pizza Hut, who attracted 70% higher ad engagements with location-targeted ads displaying store distance. Or Adidas, who targeted the FIFA audience and enjoyed a 44% jump in engagements for their campaign. Near will analyse the success of your digital and traditional campaigns, performance, and even engagement trends. Like measuring walk-ins and weighing up if consumers who see an ad then walk into the store. Like Shell, who saw a 14% increase in footfalls using location and competitor targeting. Having the right connections means that you become much more intelligent in spending your marketing dollars. Mobile is everywhere. So are we. Near has over 710 million mobile audiences, the largest in the region, and trusted by more than 300 marquee brands. Near, the largest location intelligence platform, providing real-time information on places, people, and products.
So with that as a kind of a backdrop, I'll go to the only lady other than me on the panel, Val. So I wanted to understand, what is your target audience? So when you're looking to promote PolicyPal, who do you talk to, and what is that audience?
So for PolicyPal, we target busy professionals. What do you mean by busy professionals? They are those in their 30s, working in CVD, usually like have the income of above 5,000 per month. This group of people are getting much more self-directed at the same time, even though they are busy. They like to feel empowered. That's why they go to blogs, forums, comparison sites to check out more before they make a decision. That's why we create a platform for them to understand, manage their existing insurance policies before they make a decision to buy new policies.
So if you were to break down what that busy professional was, so keeping in mind that today there's a lot of tools that allow you to target these people, so usually location is one way of figuring out who you are. So you are who you are where you are. So you might say, I'm somebody who goes to the gym very often, but if we can find a technology that actually doesn't find you near a gym very often, but somewhere else, maybe eating fast food, then you're not somebody who goes to the gym very often. So if I were to ask you to break that down, so there are tools out there as well, just like you have targeting tools, how would you break that down? How would you break that busy professional down? Where would they be?
I will have to say that because PolicyPal is a mobile app, so how do we target the group of users as well as user acquisition will be through digital channels, partnerships with other tech startups, as well as tech platforms to be able to reach out to this group of people. Because traditional, you call it OOH marketing, our home, people don't really actually have the strong conversion, because if let's say you see a TV ad and the next thing that you'll do is just relax. Probably you might not actually grab your phone and then go to your Play Store, Apple Store to actually download a mobile app to look at it. But how do we actually target this group of people? Maybe we could collaborate. Like we can target people who check into clinics often, as well as at the airport. And we are also looking at behavioral buying, because whenever people start buying like more milk powder, diapers, this is the time that people start thinking of insurance as well. Therefore, we feel that there's a need to actually do partnership with tech startups to reach out to busy professionals like this, because people will not really wake up and think of buying insurance. We need to target them at the right moment through the lifestyle approach.
Right. So keeping in line with the right place at the right time. So Yujun, you've done a lot of work with data as well, right? And how do you use that in your peer-to-peer kind of social platform that you've built with Insbee?
Sure. I think just as a quick introduction of our concept. So assuming you're the consumer, right, and you're a driver, my proposition basically is that we work with partnering insurers to come up with a new product that's distributed via our platform where it's insurance with cashback. So we are introducing a new concept called no-claim rebates on top of the no-claim discount, which basically just rewards you as a consumer. So the natural question you ask is, how do I maximize my no-claim rebate? The answer is just because this is the insurers being fairer, giving you back part of the basically the loss ratio for the insurers who are here. And then as long as you bring on responsible drivers and safer drivers into the community, you maximize your returns as well. So to the point about how we use data to actually drive some of these marketing efforts, right? I think the key thing is that, based on my last experience, the common challenge when it comes to using data for marketing is that you need to own the data. Two, you need to have the consent from the customers. So for that reason, that's why Insbee is positioned themselves as an agent, because as an agent, that's where my customers are coming through me. I'm getting the right consent. I'm also collecting all the necessary information about themselves, and also getting their consent to be marketing to them as well. And that's where we could work with a company like Adnia, whereby we actually sort of using a combination of the static data that we've collected, combining it with the dynamic data that the near network has, be able to identify where these people are, where they hang out with their friends. Because like Val rightly said as well, you don't exactly wake up in the morning thinking of buying insurance, and that's definitely not the case for car insurance. So it's very important for us to identify, based on our knowledge, when is your renewal cycle? When is it likely that you will be thinking about being reached out about your car insurance? And then sort of determining where do you typically hang out with your community so that you actually start to, if you see an ad about Insbee, and then you ask the rest of your friends, have you heard of these guys before? And as long as one of them has a positive experience with us, that's when the virality sort of steps in as well. So that's my quick take of it.
So that kind of a direct lead into Chris in terms of our discussion on the different life phases, right, that you spoke about, and also a little bit on how you're going more robo, and does that replace humans?
Yeah, so I mean, on our website, I mean, currently it's still, I would say it's still pretty primitive. I mean, we try and educate consumers at different life phases, what kind of insurance that they will need. I mean, we are in a process of creating what we call a Robo Advisor, whereby when clients go into our website, they will ask you for some simple information, just like how when you see an insurance agent, they will ask you for all those information. And the so-called Robo Advisor would be able to tell you that at this life stage, this would be the insurance coverage that you're looking for, or rather this would be the insurance needs, and this would be the amount of insurance that you need. And then it will take you to compare all the various insurance products that are out there available, and finding you what we think is the most cost-efficient insurance. And the question really is, with Robo Advisor, does it really, will it be able to take away that human advice part? I'm not sure how familiar we are about Robo, but my own understanding about Robo Advisor is that the first Robo Advisor really started out in the investment space. And I think it started somewhere in 2012. Some of us will be very familiar with the investment Robo names of Betterment, LearnVest, Wealthfront, and all that. 4 years down the road, a lot of these Robo Advisors are not doing well. I think now the only Robo Advisor that is still standing and is still receiving funding is Wealthfront. The rest of them, the funding has stopped. And the major problem of this Robo Advisor is that the client acquisition cost is a lot higher than the amount of revenue that they are bringing in. 2016, the growth of the Robo Advisor is just 1/3 of where they are last year. And so I'm very mindful of the fact that even though there is a Robo Advisor, especially the investment, for investment, I don't think that Robo Advisor will be able to remove that human element in total. Insurance products, and especially life insurance products, is a lot more complicated than investment. Okay, I'll say that again. Life insurance product, and I'm not talking about travel and car insurance, I'm talking about life insurance products, is a lot more complicated than investment product. And that's our own experience as well over the last 2 years. People will come in, they might be guided to tell them exactly what kind of insurance they need. They might be guided to tell them this is the product that could be the cheapest. But at the end of the day, they still need to call in and talk to a human and ask them, am I making the right decision? And so I think it will never, in the life, and I emphasize in the life insurance space, I think tech will never replace the human, but tech will be used as an enabler.
Also, to add to that, we can't really buy life insurance online, right? You need to be face-to-face with an agent.
Currently most insurers can't do it online. There are insurers that are already doing it, but most of the big insurers in Singapore, like your Prudential, like your AIA and all that, you are still not allowed because there's this issue of moral hazard. It's a new risk that the insurance company will have to look at. And I'll give an example. For example, you hate your father. And you hate him, absolutely hate him, but he's really rich, right? So what you do is, if you can buy online, you can apply on behalf of him, and he will never know that you actually bought an insurance on him. And once you do that, you're just cursing him. You hope that he will die very quickly, because you're gonna get the proceeds of the insurance. And so there's this first line underwriting that we need to do to make sure that you are really the person buying the insurance. Okay, you look well and all that. But I know that things are changing. Yeah, the insurance company knows how to access this risk now, and going forward, it is possible. It's going to be possible to buy life insurance online. But most of the insurers they can't do that now.
Like banking, 3-step authentication.
Yeah.
Yeah? 3FA. Yeah. So switching now to channels, and Matthias. So you spoke about digitizing insurance products, right? And the company Stark Group, which is not related to Stark Enterprises.
Competition.
Yeah. So if you can elaborate a little bit on that, because you're focused more on channels and you have a different view in terms of direct.
No, okay. So it's the first time in a conference that I can see that we are nearly on par, and I don't hear anyone saying that going direct is the future. Okay, it's the first time that I hear 3 panelists saying that we need agents. I'm glad. Even some sitting here a few months ago thought that going direct was the future. So I'm very happy to hear differently now. To the video that I've seen, insurance is not selling pizza or petrol. So you cannot really compare. Some believe so again and are spending millions on internet trying to sell leads to insurer afterwards. I will not name them, but because they believe that selling insurance is like selling a pizza or petrol. It's not the case. You need to have someone dealing with you, looking at you in the eyes, someone you can trust. Okay, put a tap on the shoulder, someone you think you will be able to call in the evening if you have a claims or a problem. So you can enjoy internet by playing and getting information, simulating pricing, have an idea of what you should buy, and what you could buy and how much you need to pay. But at the end of the day, you still need to get an agent, and we see that. So I'm sure in a crowd, someone will say, "Oh, but it works in England." England is the only country in the world where aggregator works, and still, England is one of the countries with the least comprehensive insurance in the world. Country like India tried, it didn't work well. Singapore, some are trying to make it work, it doesn't work, or are losing a lot of money because their acquisition cost, as you mentioned, is far too high compared to the products they can sell. And at the end of the day, people need trust. They are buying a product with very, very low value perceptions. And when you have low value perceptions, you have no willingness to pay. The willingness to pay is created by the agents that tap on the shoulder again, look at you and say, okay, look, this product is good to you. Have a thought and come back to me. And I give you the digital tool for you to simulate further on your product, being a life product, being a motor product, or even a personal accident. But at the end of the day, you need an agent. The only product that works extremely well online, okay, direct, it's travel. Why? Because travel is a very small amount. Okay, the product are very easy. There's no underwritings. You just ask the date of travel, where you go, and that's it. But when it comes to health or even motor, we ask much more comprehensive questions. It's where the customer gets lost, and he needs advice. And the advice is always specific to the customer. Digital will never be able to answer all the questions you can get. So, to talk about Stark believes that the strategy is on the distribution side. So it will support the distributor.
Well, anyway, Britain chose to leave the EU, so we don't really believe anything they do. So that doesn't matter. So sorry, you wanted to say something.
Yeah, so I thought I wanted to add on to that about acquisition costs and marketing and insurance. So as a young company, the typical questions an insurer as well as an investor asks me is, how much do you think you're going to spend on acquisition costs? Because it's notoriously expensive to acquire a customer. And maybe because I'm new to all this, I find it very counterintuitive because if you think about the most valuable startup in the world right now, Uber, and where you see them spending a lot of money is not necessarily in top-line advertising, but rather in giving money back to you. They give it in terms of referral fees, they give it in terms of discounts, and to a certain extent, that's how I feel the new age kind of marketing could work. And at least for us, we're going to attempt to basically, instead of using marketing dollars on trying to buy big billboards and television advertisements, I'm going to basically create a very gamified referral program. Think of it like Uber, right? Like, all you guys potentially could be my customers. If I'm going to tell you that I'm giving you $50 for every friend that you refer, and he gets $50 as well, and because car insurance has a pretty nifty margin to it, I can even fund that with my own commissions. If I raise money, I can give $100 for every friend that you give in. I gamify it such that if you refer 5 friends, I give you a 10% discount. How would that be different? When you receive a WhatsApp message from a friend to say, hey, this is a cool concept, besides the fact that you get money back at the end of the day, you also get money right up front. And I'm sort of discussing in my insurers right now is like, isn't that a more ROI-friendly kind of way where you direct your marketing budget either into an NCR or into a referral program, and then leave it to the community to spread the word? And that's kind of how I look at it. And back to the point, though, I do recognize that you still need to do regular marketing. So the message, of course, will be the referral program. But how do you effectively then target your audience will be what we said earlier, which is to use a combination of audience profiling as well as location analytics to try to find them in the right place at the right time. Yep.
Absolutely. So a point on that before I ask a question to Val is to what Matthias was saying. No, it's not necessarily true that it's not about trying to target people who eat pizza. It's about people who are seen unhealthy a lot, right? So that's an opportunity for somebody to go segue and sell them either life insurance or health insurance. So that's a potential. So it's a new way to look at things. It's not necessarily true that eventually that you'd buy the insurance at the Pizza Hut or the McDonald's. You will then need to go to the agent model and get the agent to call, or you call an agent and book an appointment, right? So very much leading into what we discussed, which is moving more from a sold model to a bought model, right? Because that's where everybody's at right now with insurance.
Before I touch on insurances, how do we move from a sold to a bought model? Maybe just to add a bit to what Yujun shared about digital marketing. So same thing as a young startup, a lot of times the insurance companies and also our investors ask how are we going to acquire customers? It costs so much. Per click on Google ad, it costs about $20 over. How can we compete with big insurance companies and financial institutions that can afford huge marketing budget? So for PolicyPal, we also agree that we do actually need to reward our customers, our users that is uploading and managing their policies under our platform. And in Asia, what we see is that a lot of people buy policies for their next of kin, for their kids. So for us, we're actually building a family tree where you can actually manage your spouse, your kids' account. So how does it connect to insurance being bought and being bought and not sold? Is that it's a lot about educating, because if you're not aware that like you need your insurance coverage as well as which area you are underinsured in and whether you're overpaying any policies, you will not be thinking of making any decision. So it is a tough journey for InsurTech startups to actually go out to try to educate customers out there. That's why for us, we target very much to the self-directed individuals. Yeah. At the same time, we believe that there's a need to weave in the lifestyle approach. Instead of just targeting people on life insurance products and letting them know that, why you actually need a life product in case anything happened to you, or endowment product. We need to weave in the lifestyle approach by targeting travel, personal accident, and also very interesting products like some of the insurance companies have like mosquito coverage plan, especially like, 2-3 weeks ago, there was the Zika virus outbreak. So we need to tap onto moments like this to acquire our users. And from there, we educate them and let them know why there's a need for life insurance product. Yeah.
Absolutely. Matthias, sorry, you want to say something?
Just a remark, again, I will go against what I hear here. When people think that we are currently selling product rather than being bought, I disagree. Okay, we only focus about 20% of the market and believing that agents doesn't do their job well. Okay, when you buy from an agent, most of the time you know the agents via your family or in the past, or you have a long history, national service, for instance. Okay, but you trust your agents, and in that case, you are able to contact him and ask him. And in that case, you buy from him, because you have a trust relationship. The focus is, again, insurance try to bypass the agents or believe that they don't need the agents. And they believe still that digital is to go direct. Okay, so they will try campaign on Facebook. They will push information. Okay, they will some will launch some app to try to go direct. But at the end of the day, most of the people, when they buy, again, because there is no value perceptions, and therefore no willingness to pay. The day a customer buys something, it's because he understood and he trusts. There is a very, very little agents that are fraudulent and try to sell something just because of commissions. If it happens, most of the time, these agents will disappear within 3 or 4 years. And there are youngsters which have been poorly educated when it comes to being an agent. So what I believe is, effectively, the product are bought, not sold, but we could try to be much more comprehensive and try to push different products. Okay, people are buying motor, they are buying life, they are buying health product, but there are missing opportunities such as property insurance, like personal accidents product, and any other schemes that are very common in Europe, like pet insurance, for instance, to name one. That could be as well cross-sell to customer. But again, I would love to see that people are changing their mind and insurance is getting there. People start to understand what they are buying, and we have to help the agents to do so.
I mean, I think I definitely agree that when you buy a life insurance product, unlike the rest of the insurance product like travel insurance and car insurance, is really about trust. And therefore, I mean, I grapple with this as well. When we put up a web portal and we talk about using technology as a distribution channel. I mean, what are we really selling? Are we using the internet to sell that product? Or are we using internet to sell trust? Because if I'm using the internet to sell trust, the way that I put things on the web would be very, very different. I'm not sure whether I'm clear here, but an example would be, I mean, in order to sell trust, you need to tell your consumer that you are an expert in this area of life insurance. And so one of the things that we try and do, I mean, I said we try because I can't measure the success right now, is that, you know, we do a lot of content marketing, video, articles, ebooks, that goes against the grain of how traditional insurance or how insurance has been traditionally looked at. I'm not sure about the markets, but in Asia, most people buy whole life insurance. If I do a survey right now and ask how many of you actually buy whole life insurance, I'm quite sure that I'll get a majority of you that buys whole life insurance. And this is very predominant in Asia. So in selling trust, it is no longer about just telling the client that, you know, you need this product, that product, but rather to tell them why you don't need whole life insurance. You actually need term insurance. It's actually very cheap. You can actually save money. Yeah, and that's selling trust. And as people read and they understand what you are talking about, and you create a delivery system, a distribution system that is free from conflict of interest, we are effectively selling trust.
Yeah, and I would chip in there because I think trust is definitely something that's very close to heart for the panel here. And even for ourselves, right, the reason why we chose to be a platform is that if you look at the next analogy, I talked about Uber just now. Now let me talk about Airbnb. Airbnb is designed for trust. But you don't exactly trust Airbnb, the technology. You trust Airbnb, the community. So that's the same thing that we are trying to achieve with Insbee, whereby I'm not asking the community to trust Insbee, the website. I'm asking them to trust that your community is on board. Your community is the one that invited you in. Your community one is that, and you're working with a community of insurers. So practically speaking, right, with the insurers that we're working with, you could form communities with anyone across the insurers. So this is not insurer-centric, which is the essence of a community. And while today I'm starting in Modo, right, the natural implications is that you start at general because, as Chris rightly pointed out, life is not something where trust comes easily with a platform. But the idea that we're trying to do here, we start with something that's general, Modo, travel, property, personal accident, at some point of time, health. And by that point of time, fingers crossed, if the community has become strong enough that they start to review who are the better providers, they start to review the kind of services they're looking for, the community will be providing feedback to the insurers of what they want, and then the insurers can innovate on that basis. So I think spot on that trust is the fundamentals of, as a distribution channel, that's something that we keep in mind.
So I'll just wrap up by saying that literally I think one size does not fit all clearly over here, and we still need the agents. So all the agents in the room, we still love you. And if you want to talk to the panelists, they all are available offline. Thank you.